Hey guys, what's up? My name is Aayush Khanna, and you're watching our channel Aayush Khanna Classes. Hey, this lecture is for CA Intermediate and CA IPCC Accounting and Advanced Accounting, paper number 1 and paper number 5. So let's start. Amalgamation of companies. Amalgamation of companies is accounting standard number 14. Okay. Uh, Firstly, I want to tell you that uh, I want to tell you that which books to refer for accounting and financial accounting. It is only study material and practice manual of old course. Whether you are in intermediate new course or old course, because all the questions in the exams will 110% come from practice manual and study material for all subjects. For intermediate, you need to refer all the practice manual except of taxation and EIS-SM. Okay, now let's start. Amalgamation of companies. Firstly, amalgamation of companies. Important definitions to be covered under this chapter is amalgamation of companies, absorption of companies, and external reconstruction of companies. Now, firstly, what is amalgamation of companies? It's just a general log. I'm not going to firstly explain you definitions. We'll move on to it. See, what is amalgamation? Uh, any company, let's say X Limited. Let's say X Limited. Okay, has the following 3 year profit: 2017-18 4 lakh, 18-19 3 lakhs, and 19-20 1 lakh. Okay, the profit for this company is declining year by year, and whereas there's another a company Y Limited. It is incurring profits at a normal rate, like 4 lakhs, 4 lakhs, 3.5 lakhs, 5 lakh, like these normal profits. It is incurring. Okay, the Y Limited either absorbs or amalgamate with X Limited to gain more profit. When two companies come with each other the main motive for both of them is to earn maximum profits. Okay, now let's start with the important definitions. Firstly, uh, amalgamation of companies. See, you can compare these notes if any other faculty provides like these. Okay, you can compare. Amalgamation of companies means it is the liquidation of two or more companies and formation of one company. Liquidation of two or more companies, two companies X and Y liquidates in order to form one new company. Okay, in order to form one new company, X and Y liquidates in order to form a new company. Let's say X Limited and Y Limited are two companies. X and Y are the vendor company, and they both liquidate in order to form a new company, that is XYZ Limited. XY Limited in this case is the purchasing company. Okay, every new company is the purchasing company. Every new company is the purchasing company. Okay, now let's take up with the next definition: absorption of companies. Sorry, absorption of companies. It means liquidation of one or more companies, but without further formation. But without any further formation. Okay. Let's say there are two companies, X Limited and Y Limited. Both are sorry, Y Limited is the vendor company. Y Limited is selling its business to X Limited. Okay, X Limited acquires the business of Y Limited. Acquisition of business of another company means absorption of companies. Acquisition of the business of another company means absorption of companies. X Limited and Y Limited are two companies. X Limited is the purchasing company and Y Limited is the vendor company. X acquires the business of Y Limited. So it is absorption of companies. Third, external reconstruction. What is that? It means there is only one liquidation but no new formation. There will be there will be sorry there will be only one liquidation and no new formation. No formation is there. Let's say X and Y Limited are two companies. Y Limited is the vendor company and X Limited is the purchasing company. Okay, and X Limited is the new company. Y Limited is incurring losses from the past few years or in the current year. That is the profit and loss account as debit. So whenever the profit and loss account is a debit, the reconstruction takes place. The company incurring losses will liquidate and will form a new company Okay, I think you got it. There are two methods of accounting in amalgamation. See, accounting methods. In the nature of merger, in the nature of merger, that is pooling, interest method, and in the case of in the nature of purchase, in the nature of purchase, it is known as purchase method. Okay, now what is purchasing company? As per AS 14, the purchasing company will not take over the share capital, reserves and surplus, and miscellaneous expenditures of vendor company. It means that the purchasing company will take over assets and liabilities of vendor company under the scheme of amalgamation. I repeat, the purchasing company will not take over share capital, reserves and surplus, and miscellaneous expenditure. What are miscellaneous expenditure? Like preliminary expenses and so of vendor company. What it means? It means that the purchasing company will take over only assets and liabilities of the company under the scheme of amalgamation. Okay, the purchasing company will take the assets and liabilities at what value? will take over the assets at the fair value, assets at the fair value, and liabilities at payable value. Okay, one small thing or one thing more, the purchasing company will take over the assets and liabilities of vendor company on the basis of selection policy. Now, what is selection policy? It means that purchasing company will not be bound to acquire all the items of a vendor company. Some assets or liabilities may remain not taken over. Okay, there is no bounding on the purchasing company to take over all the assets and liabilities of the vendor company. It does not create any bounding. Okay, one more thing. Usually, the vendor company pays its dissolution expenses or liquidation expenses. You can say, but but in case the purchasing company is paying the expenses, the purchasing company will recognize goodwill. Oh, okay, will recognize the goodwill. The entry would be goodwill to cash in the books of goodwill to cash in the books of a purchasing company. And the purchasing company will recognize goodwill if the purchase consideration exceeds the net assets taken over. It is a basic journal when we used to put entries in the when we used to put in the opening journal entry. Usually either there is goodwill or capital reserve. So in vice versa situation, it will be capital reserve. The purchasing company will recognize a goodwill if the purchase consideration exceeds net assets taken over. Okay. In vice versa situation, it will be capital reserve. Okay. Now, in the books of a vendor company, which accounts are prepared? Realization account, first account. Equity shareholders account, third. Cash and bank account, and fourth, purchasing company account. Okay. In equity shareholders account, which entities will be posted? All the equity share capital, reserves and surplus, profit and loss, profit on realization, any miscellaneous expenditures ensures in the purchasing company, and any cash if paid to them. Okay, if or if there is any loss on realization. And in case of purchasing company, we'll be putting this loads of entries, and especially the entry number 2 will carry the highest weightage in the paper, will carry the highest weightage in the question, because it will be very huge entry. Now let's start with the sum. Or yes, if the fair values and payable values not given, then what will happen? If the fair values and payable values not given, in the absence of fair values and payable values, we can assume that the purchasing company will take over the assets and liabilities of vendor company at book value. In the absence of fair value and payable value, we can assume that what we can assume the purchasing company is taking all the assets and liabilities, taking all the assets and liabilities at the book value. In the realization account, while transferring all the assets, the book value, while transferring all the assets and liabilities, the book value of the assets and liabilities will be considered, will be transferred. Then we'll put all the adjusting entries. Okay, now let's start with the question. Now, what is the difference between net asset method and purchase consideration method? In net the only difference we will recognize in questions. Okay, we will recognize in questions. I will explain it with the questions as it can't be explained like this. Theoretically, it cannot be explained. Space. Okay. I am starting with the question number 1, page page 4.65, 4.65 practice manual of advanced accounting. Page 4.65 practice manual advanced accounting. You can you have to, in any case, you have to order practice manual. The intermediate students, the new course students, should order practice manual if you really want exemption in accounts and advanced accounts, and in all numerical subjects. You must you must order practice manual. Or if you don't want to order, then you can download a whole practice manual from site, from the old code section. Okay, now let's start. On question number 1, page 4.65 practice manual of advanced accounting. Okay, let's start. I hope you must have the book with you. Okay, the question is, X Limited was wound up on 31st March 2013, and its summarized balance sheet as on that date was given below. All the things, all the details are given, or balance sheet are given. Then the details of trade receivables and trade payables are as under. कोई बात नहीं. Y Limited took the following assets at the values shown as under. Fixed assets 12,80,000, inventory 7,70,000, bills receivable 30,000. Purchase consideration was settled by Y Limited as under. 5,10,000 of the consideration was satisfied by the allotment of fully paid up 10% preference shares of ₹100 each. The balance was settled by issuing equity shares of ₹10 each at ₹8 per share paid up. Okay. The trade receivables realized 1,50,000. Bills payable was settled for 38,000. Income tax authorities fixed the taxation liabilities of 2,22,000. creditors were finally settled with cash remaining after meeting liquidation expenses amounting to rupees 8,000. Okay, mark this line. Creditors was finally settled with cash. Okay, calculate the number of equity shares and preference shares to be allotted by Y Limited in the purchase of in discharge of purchase consideration. Prepare realization account, cash bank account, equity shareholders account, and Y Limited account in the books of X Limited. Pass journal entries in the books of Y Limited. Okay, I think it's a very simple question. Now let's begin. Firstly, listen properly. Calculation of purchase consideration. You have to calculate the purchase consideration correct, as this purchase consideration carries 30% of the marks of the paper. Oh, sorry, of the question. Like if the question is of 16 marks, or let's say 20 marks, the question is of 20 marks, is 30%. That is 6 marks. Would be the marks of purchase consideration. And for old course, if the question comes for 16 marks, then it's 30% rounded off to 4 to 5 marks. Okay, 4 to 5 marks. If you calculate purchase consideration correct, the examiner would check the whole question. But if you calculate purchase consideration wrong, then the examiner might not check the question. He may or may not check the rest of the question. The base of the question is calculation of purchase consideration. Okay, see, if in a reconstruction chapter you might not do, let's say, 2 to 3 entries. If the question is for 12 marks, then easily you can score 8 to 9 marks easily. Okay, but if you dared to calculate the purchase consideration wrong, then your whole question might affect. You may get 2 or 3, or you may get 0 marks. Okay, so please be careful while calculating purchase consideration. Now let's start. Fixed assets is sold for 12 lakh 80,000. Inventory 7 lakh 70,000. Bills receivable 30,000. The total comes out to be 12 lakh 80,000. This is our purchase consideration. They have only told us to settle these. They are carrying over, the purchasing company is carrying over these assets only, so we take into consideration these things only. Now less amount paid to preference shareholders 5 lakh 10,000. I think this is 20 lakhs 80,000. Yeah, 20 lakhs 80,000. The balance is the amount paid to equity shareholders. 20 lakhs 80,000 minus 5 lakh 10,000 comes out to be 15 lakh 70,000. Now they have asked us to calculate number of equity shares and preference shares to be allotted. Okay, number of preference shares to be allotted. The preference shares payment is 5 lakh 10,000 divided by rupees 100 per share. Number of shares allotted is 5100 shares. Number of equity shares, rupees 8 fully paid up. So we'll take 15,70,000 divided by rupees 8. It comes out to be 196,250 shares. Okay, I hope you got it. The next, in the books of vendor company, sorry, in the books of X Limited. X Limited. Realization account we'll start with. Okay, see, 2 fixed assets in realization account. Or in realization account, all the assets and liabilities are transferred at book value, at book value. Okay, 9,64,000. 2 inventory, 7,75,000. 2 trade receivables, I'm letting it combined here. That you have to write properly. It's 1,60,000 plus 30,000, 1,90,000. Okay, 1,90,000. By provision for doubtful debts. Bad and doubtful debts is it's rupees 8,000. Buy. Buy. See, they are not taking up the cash. Rather, they have said they have told us to prepare cash in bank account. So we'll not realize cash here. Okay. If nothing is mentioned about cash, then you might show it in realization account. Okay. Then buy bills payable and sundry creditors. I am writing here bills payable. It's 2,66,000. Then by provision for taxation, 2,20,000. By Y Limited. What is this? Y Limited purchase consideration. We have to write here purchase consideration is to be a transfer to realization account. Okay, how much was the purchase consideration? 20 lakhs 80,000. 20 lakhs 80,000. Then to bank or cash, you can say liquidation expenses, 8,000. Creditors, sorry, first we'll write bills payable. Bills payable 38,000. Tax liability 2,22,000. And sundry creditors, we'll calculate it. Okay, So just leave a space here. Then by bank account, realization of debtors, sundry debtors, 1,50,000. Okay, the space is again over. I hope you all must have noted here till here. See, now we'll make a cash account. Cash or bank account, cash or bank, whatever is given in the question, and the balance sheet. To balance brought down. To balance brought down 3,29,000. By sundry debtors, two sundry debtors, 1,50,000. By liquidation expenses, 8,000. By bills payable, 38,000. By tax liability, 2,22,000. Now we will not do anything here for time being. Now we'll make equity shareholders account. Equity shareholders account. By equity share capital. Okay, we are gonna reverse all the entries. Liabilities is usually credit, but we'll do debit. Okay, we'll reverse all entries because we are giving money to equity shareholders. 12 lakh. By profit prior to corporation. Profit prior to incorporation, 42,000. It is given in the balance sheet. Kindly check it. By contingency reserve, all the reserves profits has to be transferred to equity shareholders account. 2,70,000. By profit and loss account, given in the question, that is 2,52,000. 2. Now here we are gonna provide them to 10% preference shareholders account. To 10% preference shareholders, preference share capital in very limited, 5,10,000. And 2 equity shares in Y Limited, 15,70,000. They are equity shares and preference shares. Okay. What's the total? The balance comes out to be in credit side by realization account. Okay. By realization account. Balancing figure. If the debit side total was to be short, then we'll adjust it by doing to cash account. Okay, by doing to cash account, we have to provide money also to equity shareholders, so that's why 20,80,000 is the total. 20,80,000 total. The realization profit comes out to be 3,16,000. Okay. To profit on realization, 3,16,000. Cash account. Here we'll do by creditors account. Balancing figure. It's over. A balancing figure would be 2,11,000. Total comes out to be 4,79,000. Then at last, account in the vendor's book, Y limited account. To realization, that is the purchase consideration, 20,80,000 by 10% preference shares, 5,10,000 by equity shares, 15 lakh by equity shareholders account, 15,70,000. The account is closed. Here the amount would be 2,11,000. Okay. Luckily the total is matched and the profit is 3,16,000 only. The total might be 27,24,000. 27,24,000. Okay. Now next, in the books of Y limited, first entry we would pass out of business purchase account. Business purchase account debited to liquidators. As you know, the company X Limited is liquidators account. Liquidators of X Limited. It's 20,80,000. Being a business of X Limited taken over. Second entry. Now this is one of the most major entry. Okay, the longest entry, so do it properly. Usually it is the longest entry, but as we are given with the less transactions, so we'll so the second entry in this case is small. See, the entry would be inventory account debited, fixed assets account debited, bills receivable account debited to business purchase account, being assets and liabilities taken over. Being assets and liabilities taken over. The fixed assets is of 12,80,000 and inventory 7,70,000 and 30,000. 20,80,000 is the business purchase. Now very small entries are left. You have to do an order. Okay, you have to do an order, not like this that wherever you have to do an orders. Okay, down you have to write down entry wise. I'll be providing a new page. Third entry, liquidators. Now we have to make payment to liquidators account. Okay, liquidators of X limited account debited to 10% preference share capital to equity share capital account. Amount would be 20 lakh 80,000, 5 lakh 10,000 and 15 lakh 70,000. Being payment made, being payment made. The question has ended, the question has finished. Okay, now we'll do more sums in the next lectures of amalgamation. So I hope you liked the lecture. One small important thing, for this is for the CA intermediate new course students. You have to not to do practice manual of advanced accounting of amalgamation. Question number 2 you don't have to do, whereas it is applicable for IPCC but not intermediate. Then question number 4, these are of paper number 5 advanced accounting questions. Paper number question number 2, 4 and rest you have to do. Okay, rest you have to do. Question 2 and 4 you have to cross it, you have not to do. We'll also be doing balance sheet, everything we'll cover of amalgamation in the next 2 to 3 lectures maximum. 2 to 3 lectures. It might take 1 lecture also, but maximum 2 to 3 lectures. Okay, thank you, take care, bye bye. Please do like and share, subscribe and share my channel for more free lectures. Thank you.